Assalamualaikum and good day. Today, we will be presenting our group assignment entitled Comparative Financial Performance Analysis of Syntech Berhad and Sunway Berhad. This presentation is prepared for the course SMP 10703, Principles of Finance for Semester 1, 2025-2026. Our analysis focuses on evaluating and comparing the financial performance of both companies over a 3-year period. Before starting, let's start with the team profile. My name is Noralia Izuma, and this is all my teammates. Now, let's move on to the other slide, which is introduction. Okay, for the introduction, this study focused on two companies listed on Bursa Malaysia, namely Syntech Berhad and Sunway Berhad. The comparison covers the periods from 2022 to 2024. Financial performance analysis is important as it allows stakeholders, including investor and management, to evaluate a company's financial health, efficiency, and risk exposure. Therefore, this study aims to provide a clearer understanding of how both companies perform financially over time. For the next slides, objectives of study. The objectives of this study are fourfold. First, to analyze the financial performance of Syntech Berhad and Sunway Berhad using financial ratio analysis. Second, to compare key financial ratio between the two firms. Third, to identify the strengths and weaknesses of each company. Finally, based on the analysis, to recommend the company with stronger overall financial performance.
Next, I will talk about company background. Syntech Berhad is primarily involved in the manufacture of flexible plastic packaging and has also expanded into affordable property development. Its operations are largely focused on manufacturing efficiency and cost control. In contrast, Sunway Berhad is diversified conglomerate with business activities spanning property development, construction, healthcare, education, and hospitality. Although both companies operate within the property sector, their overall business structures and operational focus differ significantly. Next, I will talk about methodology. This study adopts a comparative research approach using secondary data obtained from the audited annual report of both companies. Financial ratio analysis was applied to assess liquidity, profitability, solvency, and market performance. The analysis covers a 3-year period to allow to meaningful trend comparison and evaluation of financial performance over time. Next, I will talk about revenue performance. Based on the revenue comparison, Sunway Berhad consistently record higher revenue compared to Syntech Berhad throughout the 3-year period. This is mainly due to Sunway diversified operation across multiple industries, which enabled the company to generate large revenue volume. However, when we focus on the trend rather than absolute values, Syntech Berhad shows steady and consistent revenue growth from 2022 to 2024. In contrast, Sunway Berhad experienced a decline in revenue in 2023 before recovering in 2024, suggesting that its revenue performance is more sensitive to economic leads industry. Overall, Sunway leads in revenue size, while Syntech demonstrated stronger revenue stability and predictability.
Profitability, return on equity. This slide compare the return on equity of both companies. Syntech Berhad consistently recorded higher ROE across all 3 years, indicating more efficient utilization of shareholder fund. Although there was a slight decline in 2023, the strong recovery in 2024 reflect improved profitability management and operational efficiency. A higher ROE suggests that Scitech is able to generate higher return for shareholders using a relatively smaller equity base. On the other hand, Sunway Berhad ROE remain relatively low and stable. This can be attributed to its larger equity base and higher leverage, which dilute return to shareholder despite strong revenue generation. Next, profitability, net profit margin. In terms of net profit margin, Sunway Berhad maintained higher margin throughout the period. This is largely supported by its service-oriented segment such as healthcare and education, which typically generate higher margin and more stable earning. However, Scitech Berhad show a consistent improvement in net profit margin from 2022 to 2024. This upward trend indicates better cost control, improved operational efficiency, and effective principal strategy. While Sunway margin are higher in absolute term, Scitech improving margin trend suggests stronger long-term profitability potential.
So now we're going to talk about liquidity current ratio. This slide illustrates the liquidity position of both companies using the current ratio. Company Syntax Berhad current ratio improved significantly over the 3 years period, indicating stronger liquidity and better working capital management. The improve of liquidity can reduce the risk of short-term financial distress and provide greater flexibility in managing day-to-day operation. In contrast, company Sunway Berhad's current ratio remained relatively stable but lower, suggesting a tighter liquidity position and less flexibility meeting unexpected can be short-term financial obligation. So we're going to move to the solvency debt ratio. Based on the debt ratio analysis, Syntax Berhad record a declining debt ratio over the period, indicating reduced reliance on the debt financing. This reflects a more conservation capital structure and lower financial risk. For the company, Sunway Berhad, on the other hand, maintained a relatively high and stable debt ratio, while higher leverage support large-scale expansion and long-term projects. It also increased exposure to financial risk, particularly during periods of rising interest rate or economic uncertainty. There, scientists demonstrate a stronger solvency position compared to Sunway.
For market performance, earning per share. These slides compare the earnings per share of both companies. Syntax Berhad consistently recorded higher EPS across the 3 years, with a significant increase in 2024. This reflects improved profitability and stronger returns to shareholders. Sunway Berhad's EPS remained relatively stable but lower, indicating moderate shareholder returns. From an investor's perspective, higher and improving EPS makes Syntax more attractive. For the key findings, based on the overall analysis, Syntax Berhad demonstrates stronger performance in liquidity, profitability, efficiency, solvency, and market performance. Sunway Berhad, while strong in revenue generation and diversification, faces higher financial risk due to its higher leverage and tighter liquidity position.
In conclusion, Syntax Berhad shows stronger overall finance performance, supported by stable growth, improving profitability, stronger liquidity, and low financial risk. Sunway Berhad remains financially stable, but it's more exposed to financial risk due to its capital-intensive business model. for recommendation. Therefore, Sintex Berhad is recommendation as the stronger company financially and a more attractive investment option. It is also recommend that Sunway Berhad improve liquidity management and gradually reduce its reliance on debt financial to ensure long-term financial sustainability.